Hi, this is Peggy from Roar. So today our guest is Roy Cao. So Roy is a senior fintech executive. So currently he's an advisor at the Holt Accelerator. And he has been involved in a flurry of fintech over the years. He's a deep expert, and we're very lucky to have him with us today. So thank you, Roy, for being here. And
Thank you for inviting me.
no, my pleasure. And looking forward to having your perspective on the new normal in financial services. So first question for you. From your perspective, what are the major lasting impacts that COVID will have on financial services?
Yeah, so I think, from my perspective, the biggest impact, and a lot of others I know have shared similar opinion, is the view and the positioning of cash in our society. I think in the new normal, whether it's the merchant's acceptance of cash, or whether it's the reduction in the in-person transaction nature of being able to use cash, certainly the contactless form of payments is gaining a lot of ground during this time. Even for people, I think, who traditionally were less inclined to adapt this. But beyond the consumer, equation, I think on the grander scale of things, between whether you're a fintech or a financial institution and everything else in between, including the merchants and the retailers, online and in physical, are going to be the customer experience of how these contactless forms of payment or the digitization of currency is going to impact how they're transacted, how records are kept. And as far as it's not necessarily that it's going to go from a fiat currency in cash form to a crypto or digital currency, but a digital representation of the fiat currency. And so, you see some of the stats from Visa, from MasterCard, from Interac here in Canada about the big jump in volume of what they're putting through the network. And I think you're going to see, all the institutions and all the different stakeholders in that ecosystem adapt to this new normal of how people are going to transact and flow the value of a currency between parties, whether it's between a consumer and a retailer, or between a peer-to-peer being able to send money. And you're going to see an accelerated adoption, I think, beyond the wildest imagination of some of the prognosticators of what these types of transactions and how these types of transactions are going to take place, and what the volume will be.
So do you see regulations changing as well following COVID? And you mentioned, obviously, these changes in terms of cash payments. Do you see regulations aligned with that, or something else?
I think the regulations and policies, as you know, in our experience, have always been, and we've been on some of the same talks and panels, is that it's always a catch up, right? As much as regulators and government and legislators like to think that they are ahead of the curve, they're usually playing catch up, and certainly I don't think it's going to be any different in this case. And we've already been on the road, and Finance Canada unfortunately has had to hit pause again on the consumer-directed finance or open banking consultation phase 2 of it, till hopefully in the fall, as what they initially said a couple of months ago when they hit hit the pause button again. But at the same time, the idea around open banking and all the conveniences and the capability that come with it would have been very adaptable, and certainly useful in this environment, and allowing people to transact, and allowing people to share data, allow people to open accounts, allow people to access the different services that perhaps were more easily done previously physically. Wealthsimple and other online wealth management platform have also experienced a spike in their growth. Some from people who are now sitting at home and investing and decided they have extra time to do some investment at home. And so regulation and laws and rules are always playing catch up. And I suspect that will be the case again. But I think the next question for me is there the political will to tackle this? Whether And the political will includes education. A lot of opinion pieces have been written recently mostly in support of the open banking initiatives. But the very interesting aspect for me on these pieces have been the reader responses, how they feel about sharing data,
Yeah.
how they feel about having other people access to their personal data, and a lot of misunderstandings and misinformation. And I think, if a government has the political will to take this on, it will have to take a much larger, a grander, a broader approach to this, which will include a lot of education and sharing information and a general update to people's concept of an understanding of what money is, what currency is, what the value of data is, and how do you go about sharing it safely. Coincidentally, yesterday, the governor of Ontario launched a new curriculum of math, and at least based on some of the description, some of the issues that they seek to tackle, it could be part of the basis for that increased level of financial literacy and education and understanding what the modern transactions between parties, what investments look like, and perhaps a grounding for increased understanding into building a political will for new and improved regulations and laws.
Okay, thank you. That's a good insight. I was not aware of that. In terms of global financial stability, where do you see the world going post-COVID? No change, a lot of change, limited change, good, bad. What's your crystal ball telling us?
Oh, crystal ball. Wow. So I think, the one thing I do take some, I am heartened by what happened, particularly in March and in late March, early April, as this pandemic, it was the impact of the pandemic was being felt. I feel like, systems were better prepared, whether they be the Fed or to be the Bank of Canada or individual institutions. I felt like they were better prepared than 2008, 2009. And so that when, the equities market had these wild fluctuations of 5, 8, 10% changes on a daily basis, that the system was not broken. And that, the bodies like the Fed took very, very decisive steps in pumping liquidity into the system in order to fuel confidence as well as the stability of the financial system. But so that was the good part, that they took very collective action, very unified action, very decisive action, in order to try to keep up with the daily changing understanding of what the size and the depth of this impact. But the downside is there's always a snapback, right? And for the Newtonian laws of physics applies in the financial world as it does in the physical world, and for every action, there's going to be equal and opposite reaction. So at some point, all this liquidity will have to find a way to be drawn back, because you can't just continue to print money or send out checks as the Fed have done, or or provide CERB in Canada's case. And so what that would mean for the future, whether it's fiscal, it provides a level of fiscal uncertainty, I think, for the government and the policies. And in some ways, they've kicked the can down the road as needed because because of the nature of the pandemic. But at some point, they're going to have to figure out what corners or what programs would need to be rethought or cut in order to draw back some of this liquidity that's been pumped into the system. And as far as whether that's the new normal, who knows? It took 10 years really for the system to after 2008, 2009 come back where we are, and it suffered this level of shock, which I would argue it has been a broader and more deeply felt impact than just the financial system. And what that would mean for governments around the world, I do not know, but it gives me, like I said, I do feel a sense of confidence that the system and the people right behind those systems this time seem to at least know what they were doing and were able to take some decisive actions. And then and the next phase is let the powers that be and do their magic, and I'll keep my fingers crossed.
Yes, exactly. Yeah, exactly. And but to your point, learning from what happened 10 years ago and reacting way faster than what was the case has been very helpful.
Yeah.
In terms of competitive positioning and the fact that the crisis probably resets some competitive positioning, where do you see the winners and the losers in the financial services space?
Yeah. So I think that's a more nuanced question to ask, because I don't see any clear winners or losers. What I see is both, and it's not necessarily a zero-sum game, but I think I see some additive values to some of the players, and for some of the other players, perhaps there will be a reduction in the value, just because of the new normal, as we discussed. And so what I mean by that is, certainly if you were from the perspective of fintech, certainly the adoption of a more ready adoption from the consumers of a digital channel of digitization of these transactions certainly bodes well for the thesis among these fintechs that they can provide some of these services with much better customer experience, with an ever improving level of security and capabilities to provide secure transaction, and at the same time, providing a level of service beyond just the experience that could be a match for what you would expect from a more traditional incumbent financial institution. From the perspective of the FIs, the incumbents, from the perspective perhaps from the big six banks, there's certainly a going to trigger a rethink in terms of in-branch services, and how, with the change in the cash and perspective on cash, and how those in-branch services will again evolve and accelerate the evolution of the in-branch services, and what the value there will be for the different people who still choose to go in the in-branch. And I've always been one of those on the side of that. That I don't believe that branch will ever really go away, but the nature of what the branches do and the value they provide, and what they contribute to the loyalty and also the stickiness of these financial institutions to the consumers will change in order to adapt to that new normal. And so from both parties, there's something to be given up, and then something to be taken away from them. But on the downside for a fintech, I think what we saw, and we've seen some, recent deals just in the Canadian marketplace of fintech. Just this week, for example, MasterCard acquired Finicity following, Visa's acquisition of Plaid. You're going to see some of these accelerated shotgun marriages, perhaps, or M&A activity in order for the fintechs. The fintechs may not have the time and the path to mature where on a normal path, that perhaps the FIs will view them differently and will take a more aggressive path in order to integrate some of these digital services and channels and capabilities into their portfolio services, because they recognize that world is changing. And at the same time, from the FI's perspective, even though there could be some monumental foundational tectonic shifts in how their in-branch business is conducted, the relative stability that they have always touted to their customer base, and which inspires a lot of that loyalty, has again revealed itself to be true, and that the institutions, despite having a big reduction in their profits, and they have said this right words in public among all the CEOs about helping Canadians and helping their customers to overcome this, and have met the call for increased level of transparency and connections with a more, there's been a lot of calls for this, of perhaps what they have done in the States of allowing some of these fintechs to help them and to be an additional channel to help distribute the government assistance. So the US with the PPP program, Square and PayPal both have both have provided a good sized chunk of the funding, and we are a little behind that in Canada. But certainly, I think that's triggered some rethinking. So I don't think you're going to see a clear class of winners and losers. I think what some of the unique selling proposition or value prop of each of these groups have shifted a little from compared to the pre-pandemic world, and what that shift means, I think it's part of an accelerated path towards a convergence. Which, if history is anything to go by, I always use the e-commerce revolution from the late 90s, early 2000s as a bit of a playbook, and that but in this case, it would be an accelerated convergence in merging what is considered traditional or old and the new or the more innovative in approaches in bringing the necessary customer experience improvements, customer capabilities, and engagement channels to the consumer and customer. And I think ultimately, the customers will be the ones who benefit. That the biggest winners will prove out to be the customers who will have increased access to new capabilities and channels.
Yeah, and the fact that for the last 10 years, both fintechs and incumbents have been trying to work together,
yeah,
has helped to bring us to this point where now hopefully they are going to finally be able to work well together, because that's not an easy task to make them collaborate, as you know. So
nothing like a natural disaster to bring unlikely allies together.
Exactly. And so speaking about transformation, what has been transformation for Roy? What happened for you during COVID? New habits, old habits? What are you? Yoga, meditating? A lot of people are apparently in the meditation bandwagon. I'm one of them. What have you done?
So the way we interact, whether it's at events like you and I recently at a accelerator like selection day, or a lot of the more one-on-one or one-to-few engagements all taking online, that has been a big adoption. And sometimes we get a little more creative. You either bring a coffee or another beverage of your choice, and to be able to to be in a more relaxed environment to conduct some of these conversations, and this has not just impacted my the adults in this house, between my wife and I, children. The lingo around Zoom, the concept of Zoom meetings and remote working has also impacted how my kids are learning, and it's interesting to see that despite they are much more digital native than we have been historically in adopting to this. It's also interesting to see some of the challenges they met. Right, they also missed, despite our usual notion about the Gen Zs and the millennials about being only interacting on the phone. Yeah. But what I'm seeing is they still miss a level of personal connection to their friends, to their teammates, and that does not change no matter what generation you're in, and that being and conducting more of these conversations through a digital medium has definitely brought some of those interesting challenge some of the interesting presumptions that I certainly had about my children's generation and their adaptability to the digital. And the other thing is being at home all the time. it's been definitely a learning curve, not for the least of which for our dog. When we opened this conversation, when you and I first discussed it, the first 3 weeks we went for so many walks with our dog, he was getting he had this look of confusion, like, first of all, what are you all doing here all day all the time, and second of all, why are we going for another walk? And we've sort of gotten into a better pattern with him now, and he understands. But at the same time, being at home, being together all the time, it has certainly changed some of our more typical, pre-pandemic behaviors, and some of it for the good. Being able to sit down together for dinners and lunches on a more regular basis, especially because the kids are also at home and they're here. but some of it is, you realize that the human interaction sometimes is difficult to replace. That children, they can talk to their friends, but if they're not out at school or out in the playground, and for my son out at a hockey rink, for my daughter out at the barn, with her horses and her horse friends, that they definitely are a little bit more lost. They can get sucked into just sitting down in front of the TV, or my son will pop open a video game, and we have to be much more mindful of that. And the last thing I miss is going to a bar, going to a bar and restaurant.
Patios are opening. I'm like, obviously,
I know.
not nice today, but I'm in the starting block. I can tell you that. But hopefully
Yeah.
we'll have one together. But thank you so much for taking the time. It was really lovely to get your thoughts. I mean, great perspective as always. And thank you so much for taking the time.
Thank you for inviting me again. It's a pleasure to, I'm never shy about my opinions, as you know, and appreciate you having the opportunity of having a chat.
Thank you so much. Bye. Have a good day. Thank you.